Hey everybody, in this video I wanted to do a price action case study on pound US dollar and really showcasing how we can use higher time frame points of interest to build lower time frame executions, really focusing on the entry models that we dropped in the previous video and just allowing you to see how you can use the fractal nature of the markets to build cases for entry and also filter your trades to understand when to take entries, maybe when not to take entries, so that you can improve your overall strike rate and take better trades that are in line with the higher time frame direction. Basically using that higher time frame point of interest with a lower time frame execution, which is ultimately what gives us the precision that we are looking for in our trading and that we see trading these concepts. So without further ado, let's jump into it. Here's an example of how we can look at the charts and the different entries that can be provided using the risk and confirmation entries theory expanded. So here we have pound US dollar on the daily chart. And what we can see from the daily chart is that we're in an uptrend and price has just broken this daily swing high. So we've broken this daily swing high. We have a swing low here. So we're trading within this trading range right here. And what we know about order blocks is when we see an impulsive move that breaks structure, we can frame up and start building a case for entry. So what we can do is we can identify an order block with this candle right here. Now, of course, this is a very large order block. It's a very large zone. It's about almost 200 pips. So what we're going to want to do is we're going to play price forward and essentially wait for price to come in to this point of interest. I'm going to drop down to the 1 minute chart, my execution time frame, and we're going to look to see how we could have gotten involved in this trade using risk and confirmation entries. So what we'll do is we'll drop down to the hourly chart and bring price a little bit closer to the point of interest. And now that price is approaching the point of interest, we've tapped into it. Let's go down to the execution time frame. And what I'm going to do initially is I'm going to zoom all the way back to the origin of this point of interest and look for essentially the most extreme points of structure. And I'm just going to mark them out with a horizontal ray line. But if I just look into this bit of structure and we break down how this bit moves, we can see we have a swing high here. We've broken structure. We've broken impulsively, left some imbalance. So if we're looking at the candle that broke that structure and looking at the order block that we could look to take an entry on, we can look at this candle right here, which is this doji candle. And if we just keep moving to the upside, we can identify a few more. And basically what I'm doing is I'm looking at various points of interest within our higher time frame point of interest. And we're basically going to wait for price to tap into these points of interest and provide us with a potential entry. And if we just keep moving up, we can see prices moving fairly correctively. And a point that stands out to me is this candle right here. We can see that this is what causes price to move very much to the upside. We see an explosion in price and we've run away from it. Now, if we're looking at this, we can see that price almost tapped into that spot. So we'll just expand it a little bit more, but we can see that there is still a gap. It's a gap of about 0.4 pips. And if we look at the zone of the order block in and itself, we have about 3.6 pips. And what we can also see is it left this much imbalance. And if we just move my cursor to here, we still have about half a pip of imbalance that is left to fill. So what we can do is we'll just start to navigate price back to where we were, because as we can see, price created a gap and a lot of things have happened since this point of interest. And what we'll do is we'll just zoom into price, we'll hit play and let price play forward and just wait for price to tap into one of our points of interest, one of our lines that we're waiting for price to tap into. But right now at this point, we're just sitting on our hands waiting. We want to see price action start to give us an indication of what we want to see. So now we've hit our point of interest, this 1 minute refined order block. We're within the overall higher time frame order block. And as I mentioned in the entries video, we're waiting for essentially something like this to give us confirmation for an entry. So of course we would have our risk entry and our confirmation entry. Now, when we look at this type of order block, the type of order block that we're looking at is a risk entry. We don't have that secondary break structure. Or do we? We do, actually, because if we look back, we can see we have this structure. We've broken that structure. We've continued to move to the upside. We'd be able to identify an order block as this candle or this candle Hi. Yeah. Did you have a good nap? So if we look back, what we can see is that we have broken this swing high. We continued to move to the upside. Although the move was not the most impulsive, what we can see is that we created a point of interest, which would be this candle here. We could refine it to here as well. And what we can see is we spiked just below it, but nonetheless, we did tap into an order block. So if we were looking to enter here, this would be our entry number 1. And now we're looking to enter here, which would be entry number 2, which we have a more confirmed trend. Although, of course, we already have that confirmed trend. So this just solidifies that a little bit further. So now let's jump back down and take a look at our points of interest. And what we can see as well, if we're on the 15-minute time frame, if we wanted to identify this as a point of interest as well, just to refine that 1 minute, just to work backwards from that 1 minute entry that we marked up. And if TradingView would agree with me, that would be perfect. So now that we have that marked, we have an point of interest here. We had our point of interest here on the 1 minute, and we can see that this was the origin of the move that exploded the gap and continued moving to the upside. So what we'll do, we'll go back down to the 1 minute. And what we want to do is just play out price. So if we look at structure, what we can see within this structure is that we have created a low and we have a high right here. We've broken that low. So now the range that we're trading in is this right here. So what we're waiting to see is if price moves to the upside, breaking structure, or if price just continues moving to the downside. So we'll keep playing price forward. And what we can see is we have now broken structure. So if I put on a line, we can see that we have just barely broken structure. And what we can do if we want to be aggressive in this move, although we don't necessarily know or have confirmed that we are in a true uptrend, we're reacting off of a daily point of interest. We're starting to see a change in direction here on the 1 minute chart. So what we can do is we can put an entry order on this candle. We can either put our stop loss just below the point of interest or the order block, or we can just factor in this wick, give us an 8 pip stop loss, and we'll keep it at that. And we'll just see if price tags us in or continues moving to the upside, or ultimately what ends up happening. And it looks like we were just missed. Yeah, and we can see that we were missed by basically 0.1 pip. Obviously, if we were factoring in spreads, things like that, that would just definitely be a missed trade, which is okay. So what we can do now is I'm just going to get this out of the way. We'll keep in mind that we've now effectively created this type of structure. We would be looking for a break of the high and then a tap into a new point of interest. So that's what we're going to look at now, since we can either say that we missed this entry didn't quite pan out as we'd like, but we're not going to rush anything. We're not going to try and force a trade. We're not going to get the fear of missing out or anything like that. Because one other thing that we can also take note of, although we've broken structure and we're starting to move to the upside, it is possible that price could still continue to the downside and react off of these points and give us entries as well. So that's something to keep in mind. And also something to consider when we go, did I miss this trade? I should be trying to force every entry. That's not necessarily the point. We want to be methodical in how we choose to carry on, and we want to make sure that we're making the best trading decisions. So we'll just keep playing price forward. Let's wait for more momentum to enter the market. And what we can see here is that price has broken this structural point. We have a nice swing low created, and we also have an order block right there that we can look to enter on. So if I just draw on a zone right like that, we can place another order. So this would be effectively our second entry within the entry models. So we have this, we broke structure, which was this break of structure right here. We've come down, we tapped into it, although it wasn't a convincing tap, we didn't get triggered in, but it was a tap nonetheless. Moved to the upside, we've broken structure. We've been able to identify a clear point of interest. So if I'm going to redraw this just a little bit, this is actually what we're looking at, because we know that Forex or trading in general is never going to be picture perfect. So we have the mitigation here. Basically what we got was something along these lines, and we're looking to take this long. So it's a variation of the entry model, but it's still the same nonetheless. We still have that initial break of structure. We have a secondary break of structure that we're looking to enter on, because the first break of structure, we either were not able to enter on it or we just missed. In this case, we just barely missed. So what we can now do is look at a potential secondary entry, which would be our more confirmed entry, because we're starting to see that push away from the higher time frame point of interest, although we are still within that daily order block. So we'll keep playing price forward, see if we get tagged in. And what I'll do is just expand that out. And we can see that price has moved away quite rapidly from our order. I haven't quite tapped into that, so that's totally fine. So what we'll do, since we've seen this large impulse in structure, we're going to move up to, say, the 5-minute chart and just look at structure a little bit clearer. And what we can see is we've now formed this point. So what I'm going to do, we'll go back down to the 1 minute just one more time. We're going to delete all that off. Let's go to the hourly chart and just look at what's happening. We can see that we're starting to get momentum into the markets. And that's the most important thing that we want to start seeing. We want to start to see that the 1 minute trend was turning bullish and that we're starting to see momentum moving through the higher time frames. And what we can see is that price is seeing quite a bit of momentum to the upside. So we'll just keep playing price forward a little bit more. We'll just see. We have this as a potential point of interest as well. If we go back to the hourly chart, we'll just keep playing price forward a little bit more. We're starting to see that strong push away. We've created an intermediary swing in hourly structure, because if we're looking at this, let's draw that with a line actually. We'd be looking at this point. This is our structural swing high that we'd want to see broken. So we'll just keep playing price forward and see if we get a break of that high. So we now have a break of that high. We broke it more or less with a wick, and we'll see if we continue moving to the upside. We do, which is good. That tells us that there was something that has happened here that's caused price. So we know that we've tapped into a higher time frame point of interest. We know that we pushed away from it. We know we pulled back, and then we've accelerated back to the upside. So what we can do is we can identify this as a new point of interest within the range that we're looking at. This is our hourly point of interest. And what we'd be wanting to do is look for price to trade back into this to look for our entry. So we weren't able to get our first entry, but we've been able to identify a second point of interest. So again, we're reading between the lines a little bit. We're looking for essentially this point, just a little bit structured differently. We're just looking at the different time frames as well, because of course, if we go to the 1 minute chart, we can see that we have in fact broken structure. We've moved away. We missed this entry. We weren't provided any more entries here. And we know that price can still come down to these points, but now that we're looking at the clues on the higher time frame and we're pushing away, we're trying to look for a probable area to look for a entry. So now what we'll do is we'll just play price forward, wait till it taps into this hourly point of interest, and that's where we'll see if we can get a potential entry within this range. And basically what we're doing is we're just waiting for price to come into that point and then give us a reason for entry. And this is the beauty of the confirmation entries as well. We don't necessarily have to refine our zones anything past the higher time frame if we don't want to. We're more or less just waiting for price to tap into those zones, give us the confirmation that we're looking for, and just waiting on that. So we'll just go back to the hourly chart. You can see that we've had a very nice clean break of structure now. We've filled in this liquidity area, this gap, and we're just waiting for price to come back into our point of interest if it does. Let's go down back to our entry time frame. Move that, we'll expand that forward a little bit just to see if price does in fact tap into this order block. Okay, so what we can see here on the hourly chart, and what I just realized is I have this indicator on from the previous video I recorded. I'll turn that off. I hope I didn't confuse anybody. Anyway, so what we can see here is that we've created this low. We've broken that low, which means we're looking at this high as a potential break in structure. Again, we're looking for something like this to take a trade into that. That would be our first risk entry. That would be effectively the entry that we'd be looking at to take long, potentially if we actually get that true break of structure. So what we can see is we have now broken structure to the upside, but I want to see a little bit more conviction, a little bit more move to the upside. Now that I'm starting to see price run away from it, we can start to say, okay, we're looking for our last bearish candle before the up move that is broken structure. And the beauty of this is not only have we broken this point of structure, we've also broken this point of structure. We've broken 2 points of 1 minute structure. We've tapped into this order block. So things are starting to really come together for us. So what we want to do is we're going to look at this bearish candle, which is the bearish candle before the move that broke structure. Of course, we're going to now refine it because this next candle and even the candle after that haven't really brought in momentum into the market. So we can actually refine it to this candle right here, as this is where the momentum started to come into the market. And we can also see that we have a little bit of imbalance to be filled right here. If I just move that out of the way really quickly, you can see imbalance from the bottom of this wick to the top of this wick. So now that we have that, we can place our order. We'll put a buy limit order here, and we'll put our stop loss just below this zone. We'll do 9 pips. That should be sufficient. And we'll just play price forward and see if we can get an entry. So we're starting to create what looks to be equal lows. We've tapped into it once, twice, but we haven't actually been triggered into this trade yet. And we'll see, we have now been triggered into that trade, and we'll just see what happens next. And we can see that price is starting to run away from our entry, which is exactly what we were looking for. Just keep playing this a little bit more forward. Now, if we're looking at it from a management perspective, we'd want to say, okay, how can we manage this, or how should we be managing this? So we're looking at market structure. We're going to see that we broke this high, which is what formed our order block. Now what we're looking at is we'd have a structural point here. We've broken that structure. Our swing low would be right here, which we've now broken, which we formed a downtrend. We formed a downtrend to bring us into that order block. And then what we were looking at is we had a swing low here, and we had a high here. So once we broke this high, we could move our trade to break even. But one thing we should also keep in mind is we have this area, which is a point of interest in itself. So it's something that we can also consider as a secondary entry. So we might not necessarily want to rush moving the trade to break even if we believe that price is going to move to that. So what we can do is we'll go to the 5-minute chart and just look at market structure. When I execute on the 1 minute, I like to manage on the 5 minute. It just gives a nice flavor of what to expect when we see price moving. And what we can see is price is starting to consolidate. It's starting to range. If we're looking at this, we can see that we broke this structure point. But when we're looking at the 5-minute chart, we can see that we broke this range to the downside. This would be the high that we'd have to break. So currently we're still trading within this range. So what we can see is we'll just keep playing price forward a little bit more. I'll hit play so it goes a little bit quicker. So we've broken structure to the upside. What I'm going to do now is I'm going to manage my trade. I'm going to move it to break even, or just slightly above break even, to factor in commissions, things like that. So we'll move that. Our trade's at break even. And now what we're looking at is we have a potential order block that we could use to scale in right here. And what we can do one of two things. We can just execute a pending order at that 5-minute order block, or what we can do is wait for price to get back into that zone and see if it tags into it. Now, of course, it doesn't have to tag into that zone. It could just run away without it. And we'll just see what happens next. We'll see if we tap into that or if we just continue moving to the upside. Because as we can see when we're looking at the higher time frame, so if I just go back to the hourly, we can see that we've started to get a lot of momentum into this market. We weren't able to get in down here. We were able to get in right here, but we can see we've had a lot of buying strength coming in. So the chances of it coming down from a short-term perspective to tag in, the chances of it coming to the downside to tag into that order block and continue start to become reduced because of the momentum that's in the markets, because a lot of larger orders are starting to change hands. So now when we're looking at the hourly chart, we're still trading within this overall larger range, or we could refine it to this as well if you want to consider this as a true pullback in the markets. So let me just delete these lines and we'll play price out a little bit more. And what we can see is price is just exploding away. If we were looking at it from a target perspective and where we would want to be looking for a target, we'll get rid of this. The best target to look at, if we just go to the daily chart really quickly, we can target the recent daily swing high that was created to break this structure that formed the order block that we are trading. So if we go back down to the 5-minute chart, we can see that if I just keep playing price forward, You can see that we have achieved the target, which is about a 32R trade. And it was really understanding the idea of this market structure. And if I go to the hourly chart, which is interesting about this, and it shows the fractal nature of the markets as well, what we got was a move down, broke structure. We broke structure to the upside, turning the trend to bullish. We found a POI and we were able to come into it and effectively mitigate that, and that was what we looked to enter. We tried to enter down here on the 1 minute when price tagged into this larger, higher time frame point of interest, but it didn't allow us. So when we're looking at it from an entry perspective, it gives us a couple different ways of looking at it. So we've seen on the higher time frame that we formed a point of interest. We broke structure to the upside. We tapped into that order block and we started to push away from it. And so if I just put this on here, this right here is effectively this spot. This point right here is this spot right here. And what we were able to identify at this spot on the 1 minute was the fractal pattern of that. We were able to see that price created a low, broke that low, broke the high, gave us that entry, and then moved to the upside. Now, of course, we weren't able to actually get involved in that trade, but the logic was still there. Now, when we're looking at this and we factor in this picture into that, if we just move this out of the way, we can see that what ended up happening is on the hourly time frame, we broke structure and then we were able to get back in. And that was the secondary or the confirmation entry that we were able to enter on. So if I just scrunch that up and we'll put another arrow, this is that spot right there. So it's a little bit different way of looking at it. Sometimes it's not going to happen all on the same time frame, and you got to start to mix and match the theory, but the logic is still the same in terms of looking at market structure and then identifying trades. So here what we did was we created or identified a daily order block. We refined it using the 1 minute and looking at points of interest. But even if we didn't look at these as points of interest, we dropped down to the 1 minute chart. We're waiting for price to tap into this point of interest and break structure to the upside. Now, of course, if we're looking at this, there are a few other instances that occurred at. We had here, we broke structure, we had a point of interest right here. There was a chance you could have been stopped out here, but what I've said in previous videos as well, if I just zoom in on this, and we're looking at this as a point of interest, more than likely you would have gotten tagged out of this trade. So if we go like that, stop loss would be 4 pips. More than likely you wouldn't have trailed 2 pips under. So this would have been your first loss, which is totally fine. We took a loss, but at the end of the day, it's not the end of the world. What ended up happening is price continued moving down. We knew that there was a chance that price could seek liquidity lower within this order block. Why? Because this was a 200 pip order block. So that is why it is helpful and important to refine your order blocks to a certain extent. When you have, a 200 pip almost order block on the daily chart, we were able to refine a 15 minute and a couple of 1 minute order blocks as well. We had some confluence here. And that's why ultimately this area was valid for our entry criteria, because we were able to mix it with a 15-minute order blocks. We had a little bit more confluence. We had order blocks stacking as a confluence. And then we started to see our price action confirmations. We've seen that break of structure and then price moving back to the upside. So I hope this has been valuable in terms of how to execute trades, how to frame them up, and how to look for the entry models within higher time frame order blocks. Again, we had this one where we tapped into the hourly order block. Seeing as this hourly order block wasn't quite as big, we were able to wait for a break of structure, build an order block, take entry, and that was the one that was able to give us the best probability or highest probability to trade this long, that ended up hitting the target of the recent daily highs or the previous daily highs. And again, like I said, it's just the same logic applied over and over again, because what we can see here on the 15-minute chart as well, if I just zoom in a little bit, the chart's getting a little messy from all the drawings, but again, like I had mentioned, we had a break of the lows, break of the highs. We had the order block down here. We didn't actually get that, which is okay. We're not always going to get that. We had this order block that was formed. We have this break of structure, and what we can see, broke here. We broke here with some wicks, things like that. So it did ended up tapping into a decisional order block, which is what we entered on. And what we can see is once we tapped into that is the same pattern repeats here on the 15-minute chart as well. And this is why you don't necessarily need to trade on the 1 minute. We break structure to the downside, which taps into our point of interest. So this would be our risk entry, if you will. We're able to turn it into a confirmation entry on the 1 minute. But what we can see is we have this high, price breaks that high, and then we have an order block right here that we can trade to go long, and price continues moving to the upside. And price will begin to repeat that cycle over and over again. Like I said, there will be slightly different variations, but once you can understand market structure, once you can understand order blocks, and once you can combine the two and understand how to effectively read market structure to be able to take the order block entries, whether you're taking it on the 15-minute, the 5-minute, the 1 minute, whether you're using weekly, daily, 4-hour, or 1-hour points of interest and then refining them lower, it's going to improve how you approach the charts. And at the end of the day, when we're identifying the higher time frame points of interest, we're then using our execution timeframes to execute our trades and give us the highest probability to get into those trades. And the best way to get the highest probability into those trades is to look at the fractal patterns that happen once we actually hit inside the order blocks themselves. So like I said, we had our daily point of interest, we tapped into it. We can even draw this because this is exactly what happened on the daily time frame as well. We created this type of structure. Then we created another one, which is our hourly point of interest. And what did price create once we tapped into that hourly point of interest? The same structure again. And that is what we're looking for. We're looking to build a case from the higher time frame, understand the higher time frame point of interest, understand what trend is showing us, and then use the lower time frames to start building that case for entry, identifying structure, identifying liquidity, entering on order blocks. And that's the way we're able to get such precise entries with tight stop losses, is because we're using higher time frame points of interest with lower time frame executions. So I hope that this video was helpful in explaining the entry models and how to read between the lines a little bit when you don't necessarily get this all on one time frame, but you can start to see the logic in the flow using a daily order block and then continuing from there.